What a lovely day, minus 726 points. Another day in paradise. Let's discuss. Dow tumbles 725-point loss, worse since October. So why is the stock market down today? Is it the COVID-19 fears? The COVID-19 pandemic? That's just a very small reason, in my opinion. Savvy investors know it goes a lot deeper, and you made money today if you were ahead of the curve. So you got to take a guess at this stuff. I'm going to take a guess. I know you have to kind of look at the almost 800-point downward drop. At one point, it was down over 900, but I doubt that it's COVID related. If I had to bet, and note, I'm a terrible bettor. I was in Vegas for over 2 years, 2 weeks a month for 2 years. I never bet once, never gambled once. I would bet that the market is not as confident in Jerry's guarantee that inflation is transitory. Seems counterintuitive with the 10-year treasury moving down to 1.2%, but if the Fed liquidity is still being plowed back into the reverse repo market, plus or minus $1 trillion, and if the U.S. Treasury is still winding down its balance sheet with the debt ceiling debate on tap soon, then it's not so counterintuitive at all, Jerry. You know, sitting in cash, you're losing annualized 5.4% right now, but if you're into treasuries, your real rate of return is minus 4.2%, and when we are talking about trillions, that is 1.2%. is a lot of money. But people will not sit on a negative minus 4% real rate of return for very long. Those are my thoughts, all right? So what's going on in the U.S. stock market? The U.S. stock market closed sharply lower Monday, joining the sell-off in global liquidities as a concern grew about the spread of the Delta variant of the coronavirus that causes COVID-19, and as tensions ratcheted up between the U.S. and China. It's about time, right? You know, so how did the major indexes fare? Interesting. The Dow Jones Industrial Average skidded 725.81 points, or 2.1%, to finish at 33,962.04. That was the biggest daily percentage slide since October 28, 2020, according to the Dow Jones market data. The S&P 50 SPX dropped 68.67 points, or 1.6%, closing at 4,258.49. Its worst daily percentage drop since May 12th. May 12th. So the NASDAQ Composite gave up 152.25 points, or 1.1%, ending at 14,274.98 to book 5 straight days of declines, its longest losing stretch since October 19. The small cap Russell 2000 RUT shed 32.56 points, or 1.5%, to end at 2,136.8, just shy of the pullback of 10% from its recent high, or the widely used definition of market correction. So stocks closed lower Friday, with all 3 major indexes down for the week, ending a string of 3 consecutive weekly wins. The Dow saw about 0.5% weekly decline, while the S&P 500 slid about 1%, and the NASDAQ Composite shed 1.9%. So investors were getting defensive on Monday with stocks down, bond prices up, and commodities trading like there's another COVID-induced recession coming. Please, no, I can't take it anymore. So while fears over the Delta variant of COVID-19 were the trigger for Monday's sell-off, something to think that's a part of it. They were also a chance for markets to blow off some steam after a long rally without a correction. So today's sell-off could open up buying opportunities for investors willing to fade those concerns and scoop up some suddenly discounted names. Absolutely 100%. All those companies, all those overvaluations. Come on. So stocks of more cyclical and economically exposed companies were bearing the brunt of the decline on Monday. Around noon, the Dow Jones Industrial Average was down about 916 points, or about 2.7%, while the S&P 500 lost 2.1%, and the technology heavily NASDAQ composite fell 1.5%. So the yield on the 10-year U.S. Treasury note dipped below 1.2% at one point, its lowest level since February. So the Delta variant, a more contagious mutation of the coronavirus, some scientists say, has quickly become the dominant strain in the U.S. Interesting. Accounting for the majority of infections in recent weeks. The Centers for Disease Control and Prevention Center, Dr. Rochelle, I talked about her in the past, said Friday that the spread was concentrated in areas where vaccination rates were relatively low, and added that although new daily cases were up 70% in a week, hospitalization and death rates were climbing less quickly. And that is true. I called all my doctor friends at hospitals who run hospitals. They're low. So another surge of COVID-19 infection raises the specter of fresh wave of lockdowns, please no, and restrictions that would hamper the economic recovery underway. That's interesting. They said they shouldn't have locked the country down, but now they're going to do it again. As with inflation pressures firmly in place and commodity prices on the rise, as supply chains struggle to keep up with demand, an ugly word comes to mind: stagflation, or surging inflation despite sluggish economic growth. So the global economy is barely surviving on life support, and another wave of infections may spur lockdowns that could signal a death blow for the recovery, said major investment bankers. Interesting. We have a lot of people that came out and said we handled it wrong, we shouldn't have locked the whole country down, and now we're going to do it again. Okay, so fears of stagflation will be a major concern for investors if a resurgence in COVID-19 infection causes the economies to slow while consumer prices continue an upward trajectory, big time. The gloomy COVID-19 news comes as market concerns had been building on several fronts. So the fastest rate of inflation in years, uncertainty about a coming shift in the Federal Reserve policy, and pricey validations have already put stock investors on edge. Expectations are also high for the second quarter earnings season currently underway. So, hey, there is everything I've been reading. A lot of good news has already been priced into the market, with major indexes hitting new highs last week. The S&P 500 is up 16% this year and hasn't experienced a pullback of more than 5% since last fall. An environment ripe for some pullback in stock prices. But that doesn't mean it's all doom and gloom, folks, for stock investors like me or you. There are periods of corrections are healthy for bull markets, since they push validations back in a check, presenting buyer opportunities for newly discounted stocks. These validations are out of control. The companies that I'm following, it's unbelievable, especially in the real estate sector. The S&P 500 is below its 20-day moving average this morning for the first time since mid-June, when a 4-day pullback took place. Short-term momentum is now to the downside. Some money managers think the pullback will be short-lived. Okay? Furthermore, money managers from Goldman Sachs, William & Blair, noted that the S&P 500 found support around its 50-day moving average of 42.32 on Monday. The index was at about 42.40 afternoon. Concerns about new COVID-related lockdowns on the horizon might be overblown at this stage in the pandemic. You think, ratcheting up that rhetoric right now, it's safe to say that there's a little appetite for continued or reimposed restrictions among Americans, and the Delta variant hasn't been shown to cause severe infections in vaccinated individuals, keeping mortality rates low, which is what we should focus on, not the case rates, but the mortality rates. Please follow the mortality rates. Expect reflation trades, cyclical stocks, bond yields, high beta stocks, reflation and reopening themes to bounce as the Delta variant fears subside and inflation persists, and due to support from above trend growth, strong consumer fundamentals, and low earnings hurdle rate, wrote J.P. Morgan strategist. So I'm not, I like JP. They're okay. So, in other words, he's saying buy in the dip. So, 2020 styled COVID lockdowns in the U.S. should be top of the list for investors with enough to worry about already. That's right. We shouldn't have to worry about that. We're trying to get the economy back up and running. Things are starting to hum, and we're going to lock it all down again. I'm just going on what the scientists say. I don't like to get political. So they said that everything that I read said that we handled this wrong with the lockdowns, and we shouldn't have taken that approach. And you focus on the mortality rates and the hospitalization rates, and not just the case rates. Great, there's cases, but how many people are dying? What's the death rate? How many people actually go to the hospital that get COVID? So, that's everything that I read that scientists said we should handle things differently. And I just think, God, any little blip in the market, we need to look at the big picture holistically and what's going on there, and trust some of the scientists and look at other things and share information. But I think we're getting ahead of ourselves, and it's very dangerous what's going on right now with all. And I did talks on this, the spikes in domestic violence and suicide. For every million people that go unemployed, 10,000 people commit suicide. 10,000 people. So when the employment rate spiked, I went to this. Look at the highest unemployment rate and look at how many people committed suicide. Hundreds of thousands of people. Look at how many veterans are committing suicide right now. It's skyrocketed, doubled. And look how domestic violence, look how many divorces there are. Look how many people are in substance abuse programs now as a result of these lockdowns and staying home. So I just wish everyone would look at everything and not be so narrow-minded. And I'm not saying everyone. I'm just saying I try to look at all the science and all the data. And coming from a pharma background, I still read about that stuff. I love to read about the data, and I hear what Dr. Fauci has to say. I hear what other doctors have to say, and I look at it all, and I call my doctor friends and say, what should I do? What do you think of this? I read studies, and I share these studies with doctors. And that's where I get my information, not from just news, but I actually speak to scientists and doctors throughout the world. So it's interesting what I hear. So I'm just saying, get a big picture perspective on what's going on out there. And you have to follow these things too, for if you're an investor for stocks. And I every day on the stock market trading, and you have to look at these things and get ahead of the curve. And I knew this Delta variant, small part of it was going to cause some hiccups in the market, but there's some underlying triggers there as well as the point of this video. It's not just the Delta variant. All right, take care, be creative, be kind, work hard. Ciao.